Hello, everybody. I hope you're having a fantastic day. Very soon, in less than a week, October 30th, before the bell, in the morning, we will have earnings for SoFi Bank, and it's going to be an absolute barn burner. So far, the big four banks have all beat revenue expectations and earnings per share. I'm going to go over the JP Morgan. I'm going to go over the Citibank. I'm going to go over the Bank of America, and I'm going to go over the Wells Fargo. But in actuality, who gives a flying fizzle what they did? At the end of the day, all we care about is our lovely SoFi. Now, there is some news about SoFi where they're raising the APY to bring in more deposits because at the end of the day, SoFi lives off of the deposits. And while all other banks are living off of interest rates, when the interest rates are going to go down, their returns or APY for deposits are also going to go down, while SoFi's APY is going to go up or maintain the same levels. They're not going to drop as much as the other banks. The reason for this is because SoFi is not brick and mortar, and SoFi passes on its savings to its customers, not in the form of dividends to its investors, but in the form of savings account and checking account returns through APY. By doing this, they ensure that customers stay with them as long as possible and continue their journey of financial independence or financial prosperity hand in hand with SoFi. The entire thesis of SoFi is quite simple. Get them young, get them early, make sure you're holding their hand, extend a friendly hand, and make sure that your customers have everything that they need, including loans for your car, loans for your home, loans for your education, and refinancing in the future, direct deposits, and offering you a beautiful now 4.6% annual percentage yield. Not to mention they're offering $2 million of FDIC insurance, which is absolutely unheard of, that brick and mortar legacy banks just cannot compete against. You see, there's a bank called Truist Financial that I'm heavily invested in. As a matter of fact, my investment with Truist is heavier by far than my investment with SoFi. But that's neither here or there, and I have my reasons for that. And Truist Bank is heavily focusing on infrastructure for internet banking, e-banking. Well, that's literally, quite literally, the business that SoFi is in. Currently, SoFi is trading at $7.30, which is a far cry from its 52-week high, hitting $12 and closing below $12. Anytime I say $12, people are like, SoFi didn't hit $12, it only hit like $11.74. STFU. In reality, SoFi hit for a day $12 at one point in time, but did not close, and that's okay. $11.50, $11.80, $12. Who really gives a flying fizzle? At the end of the day, I do believe that SoFi is going to smash earnings, including earnings per share, including revenue, including growth of customer base, including growth of the actual deposits. And I think we're going to get a very good piece of news when it comes to Galileo, where we're going to keep increasing our customers. It's been nothing but positive news from SoFi, where they're absolutely branding themselves like studs in the direction and in the tutelage and in the forward movement thinking of Anthony Noto, the CEO, but that literally turned SoFi from a lender to an entire financial institution, not just a bank, but also financial products and financial investments. You see, SoFi is not just a bank, but if you want to focus on the bank, SoFi has essentially three pillars. They're giving you money in the form of loans, and those loans are home loans, personal loans, and school loans. Now, right now, they are completely built on personal loans. But with school loans now coming back, the moratorium is now over. Moratorium, I can't pronounce that word. Hopefully, there's going to be a lot of money inbound with refinancing student loans, and that's going to be coming to SoFi. In the meantime, SoFi is trying to get $2 billion of deposits every single quarter, as they've been doing for the last year. I'm going to show you a couple of charts right now, and I just want to show you something called Google Trends. You can get a very good idea of how a company is doing in general when following Google Trends. Google Trends is breadcrumbs and clues to see interest in something or lack thereof interest in something. Let's go over to the computer screen. I want to show you a couple of things and you tell me what you think in the comments down below. I think that SoFi is absolutely going to smash earnings and I think it's going to propel SoFi north. I think at $7.30 or 40 cents, whatever the price is right now, it is absolutely a gift of a price. Currently, SoFi is starting to offer 4.6% annual percentage yield. Deposits are insured up to $2 million through a network of participating banks because they allocate your funds into several different banks, giving you that maximum $250,000 per bank. They offer you early paydays, pay no account fees, and get covered for up to $50. I believe that there's literally no fees, and they give you early paydays if you have direct deposits set up. And they also giving you $275 sign-in bonus. There are definitely applicabilities there. You don't just get it. And then they're giving you a $275 bonus incentive, so on and so forth. And if you go a little bit lower, this is the key right here. 6 million customers so far and counting. I'm going to go over some charts in just a moment. But what I want to show you is this is JP Morgan, the largest bank in the country, Q3, estimated $3.95 earnings per share. We ended up getting $4.33. For revenue, the estimated was $39.6 billion. They smashed with $39.87 billion. It's not just JP Morgan. This is Bank of America, which I believe is the second or third largest bank. Same thing here. Estimated 83 cents. They got 90 cents earnings per share. The estimated revenue was $21.1 billion. They ended up getting $25.2 billion. If you go to Citigroup, same thing. Earnings estimated per share, $1.23. They ended up getting $1.63. That is a massive, massive beat. They ended up getting an estimated revenue of $19.2 billion. They ended up coming in at $20 billion. And if you fast forward to Wells Fargo, same story. $1.24 earnings per share estimated, reported $1.48. And for revenue, estimated was $20 billion. They ended up coming in $20 billion.86. This is absolutely massive. Now, I did want to show you a couple of things. This is SoFi right here. In the last few earnings, as you see, SoFi is smashing all the time. Last earnings estimated $473 million. They ended up coming in at $488 million. Last quarter, they were supposed to get -7 estimated earnings per share. They ended up getting 6 cents per share. They're estimating to get -8 cents. I believe that they're going to definitely smash this, and they're probably going to come in at around 5 cents or 6 cents negative. So they're getting really close to GAAP profitability, which they're supposed to get at the end of the year, early next year. Absolutely massive. Now, I want to show you something right here. This is Alejandro. Everybody follow Alejandro at ALETECH View. And he has this amazing, amazing website where he gives you the best charts that I've ever seen. Really cool. It's absolutely free to use. And what I just want to show you is quite simple. This is the membership of SoFi. Currently they have 6,240,000 members. Before that, they had 5,656,000. I believe that the members are just going to keep going up and up. It's very, very important. Now, this is what I want to pay attention to right here. Galileo was going up, 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 up right here. And then they made a slight drop and now they're back. So Q2 of 23 made up for the drop of Q1 2023. And we're even on par with Q4 of 2022. Hopefully, we're going to have the best possible quarter that we've ever had with Galileo. And this is for their revenue strengths. As you see, everything's just going up, up, up. Products going up, up, up. And this is the total loan originations. As you see, student loans were flat, right? Student loans were essentially flat from all the way 2022, 23. Student loans should start going up, but maybe not this quarter, Q4, Q1 of next year. However, look at the personal loans. Personal loans absolutely exploded. The key for growth for SoFi is going to be personal loans to keep going up and student loans to accelerate. That is literally the goal of SoFi right now. And as you can see, this is the growth of SoFi in blue compared to all the other banks. And SoFi is absolutely freaking taking off. By taking off, I want to show you something. This is something called Google Trends, and Google Trends essentially marks, interest in something over a certain period of time. This is over the last 12 months. This is SoFi. This is specifically for the United States and specifically in the finance niche. As you can see, SoFi has been going up over the last year, right? It started right there at the low 40s, and right now SoFi is at 79. Now they have their own metrics to understand what these numbers are, but you can see that they're going up. But what I really want to show you is this is SoFi over the last 5 years. As you can see, as soon as Anthony Noto started taking over, SoFi started to freaking explode. SoFi right now is at 79. SoFi was all the way down here at 20s. In my personal opinion, I think that SoFi has a massive, massive opportunity right here. And the massive opportunity is also for the investors of SoFi, the retail investors, myself, you, so on and so forth. I think I started buying really heavy at $8.50. I brought down my cost basis because of the premiums I were getting on cash secured puts. I am looking forward to see what's going to happen in earnings. If we smash earnings, I definitely see that we can go into the double digits again, north of $10. I honestly think that SoFi is undervalued right now, specifically at this $7 range. I think SoFi fairly valued would be somewhere around $10. If it goes to $12, even better. But at $7 and change, I think it's absolutely disgusting. And I think it's an atrocity what's happening to SoFi right now. They're getting absolutely no love. Now, SoFi hopefully is going to get another triple beat, beating in earnings per share, beating in revenue, and beating in forward guidance. That's a triple beat. Not to mention, GAAP profitability at the end of Q4 would be amazing, and then a full quarter of GAAP profitability in Q1 of 2024. SoFi is lining everything up to be an absolute behemoth. Remember, SoFi was literally non-existent 2 years ago, and now everywhere you look, every single app, all the commercials, all the marketing, so on and so forth, all point to SoFi. SoFi eventually is going to take the lunch of these bigger banks. Not that they're going to put them out of business, just these bigger banks are fat cats. They have so much business coming to them, and they offer so little in return that SoFi is going to keep picking at them little by little. And SoFi doesn't need to destroy those banks. SoFi just needs to keep consistently and steadily taking their clients. As those clients are going to grow, SoFi is going to grow with those clients over a long period of time, over the long period of lifespan and generations to come. You see, a father, a mother will pass down to a daughter and a son, so on and so forth, etc. and etc. And if SoFi does good by you, well, probably your family is going to bank with SoFi, and then it just keeps going on and on and on. Little by little, SoFi becomes not if, but when a top 10 bank. Let me know in the comments down below what you think is going to happen to SoFi and where you think the price of SoFi shares will be towards the end of the year. I think we end the year past $10, north of $10. That's my prediction. Of course, not financial advice, purely entertainment education. Everybody have a fantastic day. Take care.